So let me ask you this. For those investors who've been holding Tesla, have done remarkably with it, those who are holding Apple and have held Apple for a long time and seen it perform so well, do you tell them to give it up?
Yeah, from my perspective, I think returns for Tesla over the next several years will be difficult given the starting place in its valuation. So Tesla, I would be tempted to give it up. Yes, I would be looking to sell positions in Tesla.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So you know what's even funnier than a paid oil shill who doesn't believe a word he says about Tesla with a $67 price target on Tesla stock? That's right, an actual legitimate stock analyst who has a $180 price target on Tesla stock and expects it to underperform in the coming years. So in this video, I'm going to be reacting to some of analyst Toni Sacconaghi's comments relating Tesla, the stock, the company, electric vehicles, and more. And I'll also be explaining why he has absolutely no fucking idea what he's talking about when it comes to this one narrow domain, electric vehicles and Tesla. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Apple and Tesla both enjoying some big run-ups in their stock prices. Last year, Apple finished the year up 80%. Tesla did a little bit better, soaring nearly 750% in a year. So Elon Musk temporarily overtake Jeff Bezos as the world's richest person. But so far in 2021, both stocks have taken a bit of a tumble. Apple is off nearly 10%, while Tesla is down 15%. Is this a good buying level for investors? That's the question. And Toni Sacconaghi is here as a Bernstein senior research analyst covering U.S. IT hardware. Good morning to you, Toni. And that is the question. You look at where things have come down to. And let's make some distinctions between an Apple and a Tesla, or maybe not.
Sure. Well, thank you for having me, Andrew. Look, I think the context that you set is important, which is we've had a spectacular growth market for equities over the last 3 years in particular, and that really crescendoed last year, and Tesla was very emblematic of that. From my perspective, we still have pretty elevated valuations among the most expensive technology stocks. So the top 20% of technology stocks on average are trading at 17 times revenues. This is the highest sets of valuation we've had since the technology bubble. And so we're seeing some of that growth rally or rotation towards value, and we're seeing some of the froth come off of that growth value. The most expensive tech stocks have underperformed the most this year. And so that's what we've clearly seen with Tesla. Its valuation is still very, very high relative to traditional automakers, relative to a discounted cash flow, even assuming very optimistic assumptions. But the sentiment in Tesla is really an amplification of the market. If we continue to have a rotation towards value, I think Tesla will underperform more than the rest of the technology sector and the rest of growth stocks, given how spectacular its run up was, and given where its valuation remains.
Now I can see where Tony's coming from here. In his opinion, from his perspective, he thought Tesla stock was already overvalued, then saw it go to the freaking moon last year. So obviously he believes it's likely to underperform over the long term. But Tony, need I remind you, Tesla is on the cusp of solving autonomous vehicles, right? Full self-driving beta expanding widely now. The release is soon going to be public. Next minute, Teslas are driving people around autonomously without them needing to pay attention. Even if this doesn't happen immediately, even if it takes another year or two, the market is starting to recognize that this is just around the corner and it's inevitable. It's not a possibility, it's a certainty that Tesla will solve this problem. That alone is going to propel Tesla to a whole new market cap and Tesla stock to a whole new price range, in my opinion. Then on top of that, we also have 2 factories currently being constructed, Austin and Berlin. Total capacity between those, my best guess, about 5 million vehicles per year. Tesla last year delivered 500,000, so 10x increase in capacity just from the new factories currently under construction. Never mind the fact that Shanghai continues to expand rapidly and Fremont's expanding as well. In other words, there's many huge positive catalysts that can propel Tesla stock a lot further into the stratosphere. Tony, of course, just can't get over the fact that in his mind, it's an auto manufacturer, and in his mind, it's so overvalued it can't possibly keep running. Well, Tony, I'm here to tell you, dude, in 1, 2, 3, or 4 years, you're going to be very embarrassed by these comments.
So let me ask you this. For those investors who've been holding Tesla, have done it remarkably with it, those who are holding Apple and have held Apple for a long time and seen it perform so well, do you tell them to give it up?
Yeah, from my perspective, I think returns for Tesla over the next several years will be difficult given the starting place in its valuation. So Tesla, I would be tempted to give it up. Yes, I would be looking to sell positions in Tesla.
Well, Tony, I'm happy to take the opposite side of that bet. I'm extremely confident that in 3, 5, and 10 years, Tesla stock will have dramatically outperformed Apple stock over those periods of time. Guys, keep me accountable. Set a few reminders. Check back in 3, 5, and 10 years. I know I'll be right.
What do you do in EV land? Or you just don't touch it?
I think EV land is very, very tricky. I mean, if I kind of step back and I look at the aggregate valuation of the broader automotive sector, it's basically doubled over the last year. Now, a lot of that is Tesla, maybe 60% of that increase is Tesla, but you've still had the market go up about 40 or 50% from other new EV entrants.
Let's talk about this. It does seem at first glance like something's surely got to give, right? If the entire automotive industry has doubled in size, as in the market capitalizations of all of the combined automotive manufacturers on Earth have doubled over the last 12 months, unless the opportunity for them has doubled as well, doesn't really add up, right? Something's got to give. Well, there's two components to this. First and foremost, EV businesses and ICE businesses, internal combustion engine, are not equivalent. Why do I say this? One, ICE is a mature technology. The costs have been dramatically driven down over time. The volume of units of internal combustion engine vehicles being manufactured every year, well over 80 million units. EVs are a new technology, which means the costs can continue to come down as they scale. Beyond that, the most expensive component in an electric vehicle, the battery, is on a huge declining cost curve. The cost of these things is going to plummet. So too will the actual cost to manufacture over time, because electric vehicles have far fewer parts, not just a few less, way less parts than an internal combustion engine vehicle. They're literally cheaper to manufacture. Less stuff in, less components, less items, less expense, cheaper for the end consumer, and a more profitable business model, therefore justifying higher valuations. And then there's the autonomous component. Like it or not, in 10, 20 years time, most people won't be buying vehicles for personal transportation. They'll be using robo-taxis as transport as a service rather than owning their own cars and driving themselves around. Once again, high margin revenue, potential for the valuations to be much larger. However, Tony does have a point. Some of the valuations of some of these companies, especially these EV SPACs, are absolutely ridiculous. Yes, I'm talking to you, Nicola. Yes, I'm talking to you, Lordstown Motors. Yes, I'm talking to practically every EV SPAC over the last 12 to 24 months. I don't know what the investors are doing investing in these companies other than hoping, blindly throwing a dart and going, where's the next Tesla? Oh, is that it? Yeah, I'll just throw some money here. My best guess as to what's going to happen to these market caps, the valuations of these companies in the automotive space, the old world and the new world, is as follows. If the investors in the stock market in general believe that a legacy automotive manufacturer has a hope and is trying their best to move into EVs, most likely that's going to give a boost to the valuation of that company over the short, maybe the medium term, until it becomes very obvious that they're not going to succeed in EVs and they'll probably be bankrupt soon. Then their valuations collapse. Then there's the EV SPACs. Most of these companies will fail to ever reach volume production on their very first vehicle and will also be out of business. The idiots investing in most of these companies are going to lose almost everything, and there's going to be a huge contraction in the valuations there too. Then there's the winners, the likes of Tesla, who are going to absorb almost the entire market capitalization of the existing automotive market, then go well and truly beyond that as the market recognizes the potential for higher margin autonomous revenue from robo-taxis, giving customers rides as a service rather than them personally owning the vehicles. I think overall, in the future, the total market caps of all automotive manufacturers is probably going to be much, much larger than it is today, keeping in mind that there's going to be huge consolidation, and the companies that survive are the companies that are going to be producing robo-taxis to transport people, not vehicles for consumers to buy for themselves.
So you've had a marketplace that is becoming increasingly competitive the number of new competitors entering this space is tremendous, both domestically and overseas, in terms of pure EV players. You also have the traditional OEMs who are ramping up EV product. So you've had an industry that's become dramatically more competitive. And yet, when we look at the aggregate market capitalization of that industry, it's more than doubled. And that doesn't resonate with me. My belief is the global automotive industry is a hyper competitive industry. It always has been. No one has more than 10% share. There are local market preferences. There's been tremendous innovation in terms of electronics and safety over the last 15 years, but margins haven't gone up for automotive companies.
Oh, Tony, God, poor guy. I mean, I feel bad for Tony at this point. It's like he really thinks that internal combustion engine vehicles are the same as electric vehicles. They're equivalent. Doesn't have any idea whatsoever that an internal combustion engine vehicle is a mature technology. It's a century old, okay? EV, brand new technology. Has no idea that the most expensive component in an electric vehicle, the battery, is on a predictable declining cost curve. Therefore, the price keeps coming down. Therefore, your margins keep increasing, and or you can reduce your prices. Tony is oblivious to all of this. I mean, somebody please send Tony this video and make him watch it. Just, Tony, dude, are you seriously under the impression that margins won't continue to improve in EVs? Holy shit.
So what we're seeing is a bid up in the entire space, and that just doesn't resonate with me. I think 25 years from now, there'll be fewer cars sold, and I'm not so sure the margins are necessarily going to be better because it's such a competitive industry.
I agree with Tony on one point here. I'm pretty confident over the longer term we're going to see a reduction in total global vehicle sales year on year. I think global vehicle sales probably peaked a year or two ago. They're going to see a steady decline in the future as more people opt to use transport as a service, ride-hailing robo-taxis, rather than buying their own vehicles. That trend will likely continue over the long term. But again, the margins. I mean, Tony, dude, I'm just trying to be gentle here, but I just don't understand. Like, the guy's probably got like a 130, 140 IQ probably, right? Okay, he's no idiot. But how do you not be aware that the cost of the most expensive things in these things are coming down, and the fact that the more of these things you make, the lower your costs come, and then you learn stuff about how to make them even cheaper. Then you learn that companies like Tesla are deleting literally hundreds of parts in a single fell swoop by creating this gigantic gigapress to make these huge cast pieces. Like, how is Tony not aware of... Please, somebody help. I can't understand. Like, he's a smart dude. He's a competent analyst. I mean, he's got a great track record on pretty much every other company besides Tesla. Tony, what the fuck, dude?
Tony, do you have a take on fintech and crypto? I ask because we're looking at Tesla. They're obviously accepting crypto. PayPal, I believe, is going to start accepting crypto today. I think is the day that this all begins. I could be wrong about that. But perhaps, and a lot of those stocks have been on a run already themselves.
Yeah, so it's not a space that I traffic directly in, Andrew. My personal view is I struggle with cryptocurrencies as a medium of exchange. I've struggled to really find what intrinsic value is in a cryptocurrency. So personally, I've struggled with the run up in cryptocurrency, and part of it may be I don't follow it closely. But when I can't answer those two questions, it's difficult for me to endorse it.
If I'm being honest, I get the impression that Tony's understanding of Bitcoin and cryptocurrencies is about on par with his understanding of Tesla and electric vehicles. Severely lacking. Now, I feel bad for Tony. I mean, he's a pretty competent analyst. He just somehow cannot see past his own preconceptions and biases. We've seen this pattern play out over and over and over again. The question I have to you guys is, when will Toni Sacconaghi actually get Tesla, if ever? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.